Alright guys, it's very late right now. It's around 9:30 something, and I've been back testing since 6 p.m. I've been back testing and finally I got 10 trades. So I was able to complete my 10 trades, and you can see the targets. Tech backtest, and I backtested gold and GBP JPY. Gold wasn't giving me the vibe I needed when backtesting. I was really finding challenges, finding my analysis, my setups, and also my entries also, and I wasn't having that confidence in it. So on this particular trade, you can see gold. Let's go back before. So you can see the red one, anywhere you find red, meaning I took a loss. The yellow, I took break even. Green, I took profit, and blue, I took no trade. So let's go to the first trade, or back test. The strategy was SMC, you can see, and I was trailing my stop loss when back testing this particular trade. And price hit my break even, so you can see. Let me just view it. So price hit my SL on break even, and you can see I was just back testing this breaker block POI on gold. But yeah, then move to the next trade. 1 hour analysis, breaker block. That's the BB. You can see breaker block, and here's it. This was the analysis. And 15 minutes trading price if it will create market structure shift, but rather respected the demand zone. You can see on this particular one, price respected this OB, 15 minutes OB. Swept the liquidity under, then respected, created market structure shift. Then I was waiting for price to come to this particular demand zone of OB, but price kept on respecting this particular breaker block. You can see. So you can see price create double bottom inside my breaker block. You can see double bottom, first touch, second touch inside my breaker block, making it valid, meaning price won't come to my demand zone or order block. So this is a new analysis. 1 hour analysis was on my external high respected, you can see. And the next one, you can see on the 15-minute time frame, this I said sweep, because I took this particular break as my sweep of liquidity because of the volume breaking the high, external high respected, and the double bottom, you can see. So finally price disrespected my OB. Price just disrespected my OB, breaking the high. So this particular one is no trade. And also I went more advanced when moving forward back testing. So I was like, let me just bring up my A+ setup. So every trade I go to the 1 hour time frame. I'm H4 time frame. So I look for my buyers on my H4. You can see uptrend, whether I identify whether it's an uptrend or downtrend. Once I identify it, I just identify or mark my break of structure, or swing high or swing low and swing low, or swing low and swing high. Then after that, I drop down to the 1 hour time frame. That's where I make my analysis. You can see So I look for break of structure, impulsive move, liquidity, that's double top, structural liquidity and stuff. So I look for also fair value gap. Definitely when there is an impulsive move, definitely there will be a fair value gap right beside my order block, unmitigated order block, and price. Once price is coming to my zone and react as if it hasn't tapped to trap the FOMO traders. That's the idea. And also on a 15-minute, I drop down to the 15-minute time frame. I look for my candlestick confirmation, tap entry, high risk, meaning one on a 15-minute time frame. Once you just set your buy limit or sell limit. Once price gets to that zone, whether it gives a confirmation inside it or whatever it does, once price tap into the zone, it doesn't matter whether it will go to your take profit or it will stop you out. Definitely, yeah, that's a high risk. That's a tap entry. And rejection entry also. Rejection or entry also is a low risk, because once price tap into my 15-minute zone, demand zone or supply zone, I just wait for a rejection. Once I see that rejection, then I look for then I just take my market. That's a market execution. So the last two, that's the rejection and engulfing, also is a market execution. But the first one is the tap entry is buy limits and sell limits. So on this particular one, on the 4-hour time frame, this is it. We're on the bullish market. That's on gold. So I try to counter the trend once price. So here is it. I marked my 1-hour breaker block and price swept the break BB. I was monitoring the chart. I was just studying the charts. Alright, so once price swept it, price respected the demand zone. You can see, meaning the BB is invalid once price respected it, and I could have entered from there, but lack of courage. I was lacking courage on this particular trade. You can see I marked my zone, price came back and tapped into, give me my 15-minute demand zone. Inside my 15 minutes, you can see this is a rejection, a pin bar rejection. I could have entered from right there, then target the high or 1:3, but lack of courage, I didn't take it. So analysis, this is the real move. 1 hour analysis, this is it. Break of structure, impulsive move, liquidity, fair value gap, mitigated IDM. So this is a B plus. This is not an A plus setup, this is a B plus setup, because there is no impulsive move inside this. You can see there is no impulsive move here, but there is a fair value gap right there. Liquidity, trend line liquidity. Then I'll wait for price, but yeah, I wasn't able to continue. That's when I switched to GBP JPY to check. So on GBP JPY, this analysis, there's it. So TP smashed. TP smashed, and also let me just switch to record on the monitor then. Alright guys, so we are back on GBP JPY analysis. On the 1 hour time frame, I took my entry on the 1 hour time frame. I didn't even realize I took the entry I executed on this particular trade here. So let's just go back to the analysis. So focusing on current price action. So this was the current price action I was looking out for. So on this particular one, why is it not load? Alright, so on this particular one, I just can see on the 4 hour time frame, I always be like, I identify my buyers. So my buyers was downtrend, and also I marked my break of structure to the downside, and my swing high and swing low, you can see. So on the 1 hour time frame, I just marked the extreme supply zone, 1 hour supply zone, and also price just dropped down to this particular demand zone. You can see this particular demand zone. What was the real move was up there. So price just gave me inside my 1 hour demand zone. Price gave me my rejection inside my zone, and engulfing candlestick, that huge engulfing candlestick. So that triggered me to enter into this particular position. I was targeting 1:3 RR. So I was waiting for price to just give a little retracement, then I take it from there. So that was it for this particular trade. So moving to that one, that's a green profit. Moving to this one, alright. So you can see SL hit counter trading, 1 hour time frame. I saw rejection and entered. I'm feeling sleepy right now. I'm not going to lie. I'm feeling very sleepy. I'm sleepy right now. Like, I'm tired. I've been back testing for I think 6, 7, 8, 9, 10. No, 3 hours now. That's a lot. That's not a lot, but yeah, is it? So TP smashed on this particular one. I took a risk entry, get it, because I didn't see I took a risk trade. I saw a rejection inside my 50-minute time frame. When I dropped out to the 50-minute time frame, I saw my entry criteria, like that's the rejection candlestick. I always look before entering, but price just stopped me out. So on this one, TP hits on a 50-minute time frame. You can see this was the 1 hour analysis. I took this particular demands on this doji, entire one. Price tap into it, Morningstar rejection plus engulf. You can see. So that was inside my inside the 15-minute time frame. You can see this Morningstar bearish doji engulf candlestick. So I took it right there, and this GBP JPY particular trade was a TP hit. It covered my loss. That's why I marked it green. So we start all over again. We move to the H4 to identify our directional buyers, and you can see we are still inside the range. We drop down to the 1 hour time frame. My extreme price finally tapped into my extreme zone. You can see right there, and this particular one, price hit. I was trailing my stop. No, once price broke this particular low, I just moved my stop loss to break even to secure you guys, and price finally hit my stop loss. Because the reason why I did that is because this high could have been a liquidity, because there's a huge fair value gap, unmitigated fair value gap, and also unmitigated order block. That's why I moved my stop loss to break even as fast as possible I could. So on this particular trade, so you can see break even. So that's why we have the yellow over there. And also this particular trade, same analysis is for identify my buyers, same zone on the 1 hour time frame. Price finally hit my stop loss on this particular trade. You get this price. I took the entry. I took those entries because of the rejection I was seeing. This particular rejection is not healthy because there are too many rejection inside, and I had to wait for an extra confirmation. That is the engulf candlestick, and wait for a little retracement to the inside the engulfing candlestick before I can take my trade right there, but I didn't, and I took it right there. Once I saw the rejection, that triggered me, and I took my entry from there. And yeah, price stopped me out. So this re-entry, fear didn't allow me to enter into this particular trade, because so inside the same range. You can see I marked the extreme. Yeah, let's just go. This is the trade. This is the outcome of the trade. So first trade, this was the extreme 15-minute unmitigated supply zone. You can see inside there is unmitigated fair value gap, but it's very tiny, you don't see it. But my zone, I made my supply zone cover that fair value gap. Price fully tapped into that and mitigated it fully. Then the second trade and the third trade also, price gave a change of character, a charge, and price tapped into. I marked this particular trade because this particular demand zone, because I don't have any reason for this one. For real, I don't have any reason. But maybe if price stopped me out, I would have taken the extreme. That was the risk I was taking. So once I see that rejection inside the zone, I was like, bro, like, this is a trade. So I took it. I didn't hesitate, and I took the trade. Once I saw that engulfing candlestick, this particular engulf candlestick, I was so uncomfortable with it. I was so comfortable with this trade because of the candlestick, engulf candlestick. And price finally broke structure and came back. I marked this particular supply zone right here, but price filled it. I entered it inside my brokerage. That trade casa has, as if I'm forward testing it, you get it, but I'm back testing. So I placed my entry at this particular high, and price liquidated me. So I didn't take it again. Price liquidated me, and yeah, I was waiting for a re-entry on this particular zone because price broke structure, and when you look over here, there is no fair value gap or impulsive move right here. So this is the most recent supply zone with my A+ criteria. What's are my A+ criteria? On the 1 hour time frame, this was the 15-minute time frame. So I look for my break of structure. That's it. This is the break of structure. Impulsive move. This is the impulsive move. Liquidity. That was the liquidity structure high. It's also a liquidity, and there's no liquidity, let me say that way. Fair value gap was there, unmitigated supply zone was there, and IDM. I chose this as my IDM, not my liquidity, because price did not break this low. And let's take it as if price just reached there, and broke this particular low. That would have been a structural liquidity for me, but price failed to break that particular low, making it an IDM. Price came back, swept all the IDM, but never tapped into my zone. So I missed this particular trade. So I missed that particular trade, and yeah. Let's move to the next trade. The next trade. Yeah. 3 more trades to go. So this was, I didn't take the blue means no trade. So price disrespected my demand zone, creating double top inside my zone. So you won't understand unless I show you the real move. So on the 1 hour time frame, the price respected this particular demand zone, but I was waiting for price to come to the extreme, but price never came to the extreme. So I made this to one go. This particular trade go. I didn't even try to. So inside my trade price, I did not fall for this rejection confirmation. I was waiting for extra confirmation, that is engulfing. If this was what happened to me on that previous trade, I told you about that too many rejections inside my zone. So this particular too many rejection, I didn't fall for it. So I was just waiting for engulfing, and the two candles was also done. Once price prints, if price was able to print that particular engulfing I was looking for, I would have entered. And if price stopped me out, I know that I followed my trading plan and trading rules, and it stopped me out. So yeah. So I reanalyzed the markets again, and at this particular one, I marked where the double top was. That was the extreme high, and price disrespected my zone. So no trade. Alright, so on this particular GBP JPY trade, 4 hour time frame, price on the 4 hour time frame, that's where we analyze or we check our buyers so that we ride with the market, so that we don't fall or trade against the market. So on this particular GBP JPY trade, so on this particular GBP trade, price always when you're about to analyze or take a trade, we just go check our directional buyers. So on the 4 hour time frame, I went to the 4 hour time frame to see what the market is doing. So I saw that price was creating drop based rally. That's a reversal pattern, and yeah. So once I saw that, I just dropped down to the 1 hour time frame, took the most recent break of structure, and this was the break of structure I saw. Price was just, I saw on this particular trade here. This was what I was looking out for. I saw that IDM, I took that low as an IDM, and price was just respecting that supply zone. Why did I mark that particular as supply zone? So when you look at this candle with here on the lower time frame, it's a structure. You get it. On the 5 minute time frame, it's a structure. So I marked psychologically, I marked that as my break of market structure shift, and this particular one break of structure, and this particular one break of structure, and this ones are my liquidity. That's triple top. You get it. So price just tapped, and there was unmitigated and fair value gap zones up there. So price just tapped into it. I wanted to counter trade that particular one here, but price did not allow me. I would have crashed this particular trade here. So once price got to that particular supply zone, price created a market structure shift. That's a valid market structure shift. Why didn't I take the fall for this particular one? Because I wanted an extreme supply zone, and that was it. Once price tapped into my supply zone with that candlestick, I did not enter because of the candles, because it was too huge inside my. So once I saw that drop, I was like, I was shocked. meaning my analysis was right, and I was just fast forwarding the trade, and I missed that particular week. This week was a retracement, so if I was able to like slow down a little, I would have seen this rejection and I would take it from there. Then target 1:3, and prior when I saw on measured, price just gave me 1:3 exactly before reversing. So this was it, and my setup failed. Everything failed, meaning the supply zone, we were trading against the trend, bullish. We are in a bullish scenario, but we are trading against the trend, so my setup failed. And let's move to the last trade, then I call it a day with you guys. So as usual, I don't even care whether if I know it or I don't know it. I always go to the 4-hour time frame, and I saw the same pattern, job-based rally, meaning a reversal. We are looking for buys. So on the 1-hour time frame, I dropped down to the 1-hour time frame. I made my analysis. I saw the huge candle impulsive move that breaking it. So I dropped down to the 1-hour time frame. I'm lost. Forever, like I didn't journal this. Oh, I didn't journal it all. Let me see if I have that same analysis right here. Oh. I think. Oh yeah. No, I still need to see it. So let's see what that is. Alright. Here is it. Here is the trade. So let's go back to the 1-hour time frame. Let me just take this shots before I forget. When you're not patient enough, you cannot trade backtest with trade cost unless you go for premium. I have no choice than to exercise my patience on this particular firm. Alright. So yeah, on this particular one, I just took this most recent demand zone right here because that was the demand zone that created that impulsive move. Price went down, swam the liquidity, respecting this particular demand zone right here. This demand zone here, respecting this demand zone here. So that was the demand zone price respected. So once you drop to the 15-minute time frame, I saw it, but I wasn't feeling that vibe because one, this a low probability entry confirmation I'm seeing right here, so I didn't even fall for it. I didn't even take it. That's it. So cause I didn't see any fair value gap impulsive move, like reanalyzing it, I didn't see any of them. And this was why I saw it like a little break of structure, impulsive move, fair value gap, and yeah. But I would have marked this zone also, because that was the zone that created a huge bullish or impulsive move break. Like once price get there, I'll just look as usual, my rejection and stuff. My rejection, then take it from there, or just wait for the extreme side. So yeah, that is it for today, and thanks for tuning in. And yeah, thanks for tuning in. Nothing else. So I finally crashed my day one of my day one. I crashed my day one. Ghost mode. I crashed it and removed tomorrow. It's time for me to go to bed. That's 10 p.m. exactly 10 p.m. By 8-9 I have to stay off from every screen.